Hey again. Gonna run soon. I'm gonna run a poll and see whether you guys can get sick of my voice and my videos. Hello again, Matt Maniac. Fibonacci retracement. Hey, and while we give it a minute or two before we get started, after Fibonacci retracement, what else? What else would you like um, to find out more about? I need the next topic to get into. And I think, Jen, I saw your feedback on the towards the end of the last session. I will take that on board. We can do that for sure. One more minute before we get started. Slightly distracted looking at charts as well. All right, who's here? Drop a message if you are watching. If you are on YouTube, you're on TradingView, drop a message, let me know, and then we shall get started. I just want to see, who's on board, and then also that just so that I can test whether this is a good timing to do an educational series, or whether we should do this late in the day or early in the day. Still figuring stuff out. Congrats, man, Maniac! Good 60, fantastic 60 pips. Price is still fighting with. I'm just looking at it. It's still fighting with that 132 level. It looks like it's going to break. It might break 132, especially during this session whenever we're not paying attention to it. But it's going to get interesting. Alrighty, let's go. Now that Mad Maniacs made money, we can get started. So Fibonacci retracement, we're looking at the different levels: 23.6, 38.2, 50, 61.8. You guys have seen me use it sometimes during my analysis on a daily basis. So I just wanted to share with you, right? This is going to be a short and sharp session. I can pretty much guarantee it's not everything you need to know about Fibonacci retracements or the tools. There are many different ways to use it. There are ways to, extensions, expansions, all the different things that you can use with the Fibonacci. There are other strategies, Elliott wave, the Elliott wave and the harmonics, all the different ways that you can use that. So this is not the complete version. This is sharing the how to get started with it and how I use it, right? So at any point in time, if you have further questions, please feel free to put it into the chat either on TradingView or on YouTube. And also, like I was sharing earlier, is that if you come across any other topics that you like more information on, and it's something that I am familiar with, right, I would be more than happy to do up a session for that as well. Okay, so if you ask me, for example, about Elliott wave, I will tell you that I don't know enough about Elliott wave. It's not something that I use. You guys know that it's not something that I use, so it won't be something that I'd be comfortable sharing more detail with you guys on. All right. Hey, Akmabi, you're most welcome. Thank you for saying that. Thank you. All right. So, as usual, quick disclaimer: any information contained on this webinar should not be construed as advice and is presented as educational material only. Your objectives, financial situation, and needs has not been considered, and you should consider its appropriateness to your circumstances. I will not be looking at any trade setups. So the contents of this webinar is not intended to be a recommendation to trade a financial product. What I always suggest with educational sessions, especially, is that you should First, go through the information that I'm sharing with you, read more about it, learn about it, then test it, back test it first, right? Get familiar with it. Then after that, jump onto a demo account or a small trading account, test it out further before using it on your, or integrating it fully into your own trading strategy. Okay. So what is the Fibonacci retracement tool? Actually, if you guys can, put it into the chat. Let me know. Do you actually use the Fibonacci? Do you actually use this tool? Why I asked you that question is because I never really used it consistently. In fact, I would use to say that you can draw the Fibonacci levels, but I typically prefer my students or people that I'm coaching to draw their own support and resistance levels first, right? To draw their own support and resistance levels first, because that way, with the levels that you draw, you become more confident. You understand why you have a support and resistance level, right? You understand why you've drawn the levels. Then, if you want to, you apply the Fibonacci on, and what you'll find is that your levels tend to coincide with the key levels on the Fibonacci, right? It tends to coincide, and that's where you go, okay, I've drawn my levels, it makes sense to me, and I've tested them with the Fibonacci, and it makes sense. Through that way, you gain more confidence. You build a skill for yourself in terms of drawing the support and resistance, and then you've tested it out. You've verified, so-called, your levels using the Fibonacci. Okay, so why am I integrating it a little bit more now? Is because it becomes a faster way to identify levels, right? You're looking for the highest point, the lowest point. You're drawing that line or that Fibonacci down, and then you identify the levels at 23.6, 38.2, 50, 61.8, and 78.6. So it becomes a faster way and it's more efficient, I would say, while we're doing this during the webinar. Okay, so that's one of the reasons why I have integrated this into part of the analysis or the set of analysis that I do. Excited for this as I find it useful. Very good, Angel Case. Extra confluence. Yes, exactly, right? So you got your support levels, you're looking for the extra confluence. Just a fun fact, I'm sure you all know this already, it's just that Fibonacci levels, or the percentages, as much as it's discovered by Leonardo Fibonacci, doesn't really matter, doesn't help your trading. It's been around for a very long time. How it came about, it applies, you look at the way shells are made and all the different things in nature, we do see that distribution across those different percentages, 23.6, 38.2, hang on, where's my thing? Okay, 23.6, 38.2, 50, 61.8, and 78.6. And we all know that, the big key number is that 61.8 level. Okay? So just to give you the quick overview of how it looks like, basically you always go from the top. I will do many examples of this, right to the bottom. Okay, and then this is on TradingView. You see it just as you drag that down, you see the percentages appear right across. Okay, and we can see that 61.8 in gold there is that key Fibonacci level. All right. Let me just see any questions. Oh, good. Okay. So, the question always comes around is that where do you draw, which key level do you draw to, which ones to pay attention to. I'll get through all that through this session. So why is the Fibonacci levels or Fibonacci retracement so important? The way I look at it is that it can help me identify a possible change in the trend. right? It helps me identify either a change in the trend or a continuation of the trend, right? What I mean by a change of the trend is when price breaks a Fibonacci level, when it breaks that level, or a continuation is when it bounces off the level. Okay, so coming back to the chart from before, you can see that we've gone from this point all the way down. You'll be looking at it going, okay, to be extra safe, if it, in some cases only, not always using it, good. If it breaks above that 50% level, right, that means price has bounced up and it's recovered more than 50% of the previous move. That's when we would say, it's a change, or it's going to signal a change of a more sustained change of trend. Okay, don't be fooled. It's not going to tell you that at that point we're saying that price is going to go back up. In fact, what I always say is that if anyone's going to tell you where exactly they can identify a change in trend is right at the start, is possibly going to be lying to you. All right. So how I look at it is I can see price moving to the downside, and you all know that I'm a trend following trader. So I'm always looking to sell. Price coming down, I'm looking to sell it down. I look to see price reject that 38.2 level or in that area. I'll be looking to sell it down. Right, as it bounces back up, once it breaks above 38.2, it breaks above 50, I'll be going, okay, now that downward move is somewhat invalidated. From this point onwards, I'm looking for that upward move. Okay, so that's why I use Fibonacci. I look at that 50% and that 61.8% as the levels that's going to identify a change or more sustained change in trend. And then if it bounces off a level, we look for it as a continuation of the trend, either to the downside or to the upside. Right? So like what we have here. A change in trend, 50% or 61.8%. Again, these are not hard and fast rules. Okay, not hard and fast rules that it has to be 50% or has to be 61.8. There are several reasons why this is not a hard and fast rule. It's because, for example, if, for example, a news event could cause price to spike up, and then the next following news event cause prices shoot right back down again. So always consider, these are technical tools. These are technical tools that gives you an indication or signals an indication, but it's not the hard and fast. All right. How I look at it, and I used to have a tagline. No, I still have that tagline. Fundamentally driven, technically timed, right? So prices are fundamentally driven in a direction, but the entry is technically timed. You look at the technicals to look for the timing of when to get into a trade or not to get into a trade. And what time frame is best for Fibo? I'll tell you that shortly. Okay, so typically I look at 50 to 60% or 60 61.8% as the level that's going to tell me where price. So you can see if I can draw that straight line right across. Okay, you can see that price has broken at 51 and is broken up, and then we're going to say, okay, great. We're looking for the upward move. The continuation of trend is when price bounces from the 23.6, 38.2, or 50%. All right. Again, this is how I look at it. Hang on, throat's going mad. All right, this is how I look at it, where I see price, for example, this big upward move, and you all know this is gold. It went up to that 2000 level. It retraced back down. As it retraces back down, I see that it's broken that 23.6, but 38.2 hold strong, right? 38.2 held at this point, and that's where we would say it's a continuation of that upward trend as it bounces up. Okay, so that's how I look at it. If it holds at 38.2, bounces up, then we say it's a continuation of trend. Or alternatively, if the price breaks 38.2 and bounces off 50, then we could see this as a continuation of the upward trend. What you would see is that the deeper the retracement, right? The deeper the retracement could lead to a bigger bounce to the upside. Because you can see it came all the way back down but failed to sustain the downward move. You're going to see price push back up. Okay, so it's not just the levels that you pay attention to, but which level it drops to could signal that big push back up again. All right, so far so good. Any questions? No questions. Okay, good stuff. Then, based on she's sorry, I'm messing up your nickname. Question on when's the best time frame to use the Fibonacci. It can be used on any time frame, right? On the daily time frame, the H4, H1, the M5, M15, M1 can be used on any time frame. But we all know that not just on the Fibonacci, but right across the board on all the other tools and indicators, the bigger the time frame that you use on, the longer the time frame that you use on, it's going to be more accurate. It's going to not be a guarantee, but it's going to be more accurate. Okay, so you want to look at it on a bigger time frame. I don't actually do a lot of trades or analysis on a daily time frame, just because my own trading is short to medium term. I find that most of you guys do a lot of your trading on a short to medium term as well. So I don't look at a daily time frame on the analysis, and that's why I don't do my Fibonacci on that time frame. I do look at it on H4. I look at it on H1. Right, so I look at H4 and H1 on a usual or typical basis. I don't use it on a smaller time frame, on an M15 or M5 or M1. In fact, actually, I use it mostly on H1, right? H4 is sometimes, but not all the time. How can one know the Fibonacci level will respect? I will get to that. That's a very good question. I'll get to that. Okay, so I look at it mostly on H1. On the M5, M15, M1, okay, I don't do it on M1, right? You can, but I don't do it on M1. I do it on the 15. This for me, I do it on a normal. I'm trying to write with a mouse, so that's terrible. On a normal basis, right? Normal analysis. When I look at it on the M15 time frame, this is when I look at it with a news. I should get something to help me write better. Okay, with news. So when there's a news event being released, I see a big push in price, then I could big push down. So what we normally see is a news event comes out. At that point, price shoots down, right? And we all know that as price shoots down, we're going to see a big retrace back up again. It could be on the M15, M5 time frame. This is where I would do my Fibonacci levels on the smaller time frame. This is on the news event. Right, just to help me identify the possible levels that we could see price hit, reject, and turn back down. Right, so if I'm looking at for example, an interest rate decision, I'm looking for price to keep dropping. I'm looking for that continuation of the downward move. As it retraces, I'm looking for a test and a reject before I'm looking to sell back down again. Okay, so this is how I would use it on different time frames, in particular the news on a smaller time frame, and then on the H1, for example, you see price pushing up, and then it's turned back a little bit. I will identify the levels, just because I'm trend following. I'm looking to see, I might have my support level in the middle there. I'm looking to see in between here, is there any chance where price could continue back up again? Very similar. Let me just close one of the window there. Sorry about that. I have my WhatsApp beeping away. Okay, so very similar to the way the news is. But you all know that when you do a smaller time frame news, it could retrace back and then after that shoot back up again, that kind of thing. So as much as I would suggest, keep with it on the H1 time frame, not so much on the smaller time frame for now, until you get more proficient, and then you look at it on a smaller time frame. How do you decide which is the impulsive start of a wave to know where to start to draw the fib from? Okay, I'll show you that as well. All right, so how to use a fib? I'll call it fib. Fibonacci retracement just ties my tongue up. So to use the fib, you first identify a trend. Okay, so to answer Jen's question, identify the trend first, right? And then look for the high point and the low point, or the low and the high, or vice versa points, and always from left to right. I was talking to another trader about this some time back, and the trader was a little bit finding difficulty with the fib levels or drawing Fibonacci's. And when we talked more about it, then I realized the person was actually drawing it from right to left, from left to right, and all around the place, right? So always remember, follow the trend, left to right, major swing points. Okay, and then crucially, once a level is broken, it is invalid. Okay, once a level is broken, it is invalid. In fact, what I'll do towards the end of the session is I'll bring up some charts, and then we can draw it together as well. Okay, just to show you and to answer some of those questions. So this is the dollar index. Okay, I think in relation to the question of how do you know the Fibonacci, which level the Fibonacci price will respect, and how do you start drawing the Fibonacci from, there is really no. Okay, let me just do this actually. You know what? It's going to be a lot easier if we did this. Give me 1 second, just setting something up. I just thought of doing this right now. Okay, I got that. I have that. Okay, let me just put this right across. All right, so I was just sharing this view. Let's take all that away for now. All right, so if we did a Fibonacci, so the question is, how do we know where to start drawing? Let's say, you have a high point here. You have a high point here, and then you have that low point here. Okay, typically you'll be looking at this to the downside. Okay, you have that. You have that from that high to that low, you've seen price bounce up. This is the dollar index on the H4 time frame. Now let's say that if you drew it from this point, right? So we're looking at those different levels. I'll zoom in a little bit so it's easier to see. Right? If we missed this, if you looked at your charts and you had it probably a bit too zoomed in, you didn't see that previous one, you only found this high point, and you anticipated that this was the high point and this is that low point there. Okay, it's actually not such a big problem, right? It's actually not such a big problem, because what you realize is that the levels do tend to coincide, right? The levels coincides very nicely. Okay, this one's a bit far apart. This one's we do have an area there that coincides. Okay, so it is, drawing of these levels is relatively, or it has some subjectivity to it. It does have some subjectivity to it, but as with how I look at the trade, or how I look at support resistance areas, and how I look at fib levels and how I look at price. You guys, you go through my daily analysis, you know that I almost don't remember price as quickly as I turn away from the chart. So one thing I would always remind everyone is, don't try to be too fixed on a price level, right? Near enough, quite often, is good enough, right? Near enough is good enough. You can see that in this case, price came up quite close to that 38.2, quite close to that 50% level, and then retrace back down again. Okay, so near enough is close enough. Where you start from is, you don't want to start from, I'm just trying to move this circle away. Okay, you don't want to start from nowhere, because that's going to be random, or you don't want to start there because you've missed out on that high. Okay, but it's just these levels that is going to be more, if you start from here or here, then it's going to be more less of a big issue. Okay, makes sense? I hope that makes sense to you guys. Where is it? This one. Okay, so you start from a high point. This is the high, and then this is the low, and then this is the low to the high. What I say remember is that you do want, as we said here, is to follow the trend and look for the major swing points, right? So what I mean by follow the trend is that your price do tend to, or should tend to, follow along that middle line. There's a reason why the middle line is there. It's not just to tell you, where you've drawn, but that middle line, your price should be following along with that middle line. And in this case, it's above that middle line, it's following on with that trend. What you want to avoid is doing something like that, right? What you want to avoid is doing something like that, where you have that high point. Oops, let me just not mess up my charts too much. Right, is that high point up there, and then you got the low point here. You've ignored this low point here. You've ignored that high point there. You've ignored several different key levels. And what you also notice is that the highlight, or the main thing to take away from this slide, is that it's a big downward move, but this one was that big strong upward move. So it's not really following the trend. Price was moving down, saw a big push and then big down again. It's ignoring that point where you have to follow the trend. You're not looking at the major, or you're ignoring several major swing points as well. Okay, so this is what I would say is incorrect, right? I don't know why I just drew an X there, but incorrect so-called way to draw the Fibonacci, given that it's got that big, it's not really following the trend. We've seen that big push to the upside. Okay, so how you would adjust this, right? How you would adjust, when you say the middle line, are you referring to the diagonal middle line? Yes, this dotted middle line there, right? You do want your price to follow along in that direction. You want price to follow along. Okay, you might not be able to see that. Yeah, you want price to follow along along this middle line. You want price to follow along this middle line to the upside or to the downside. You don't want it to be. Oh wait, I can't change the slide. Okay, this one follows, but then it breaks strongly. Doesn't seem to be following that diagonal middle line. Okay, how you adjust this slide, how you adjust this chart, is to have it a little bit differently, and you would say that, okay, same chart, but I have my fib level down, right? And now you can see that price actually follows along that diagonal line, that diagonal middle line, and then I would have another one up there. I'll show you again, and then this one follows that diagonal middle line down. Okay, one of the biggest common mistakes that most traders come across, is that they do tend to draw it, right across, and they don't follow the trend too much. Another common one is just what we're just sharing, is that you get too worried about missing a high point, and then you start drawing too many Fibonacci's, right? You start drawing too many Fibonacci's, and then you end up having a super messy chart, right? Even just looking at this, you guys know that, doing my daily analysis, I really like to keep my charts quite clean, keep it quite neat. So even looking at this, I'm just like, oh, it's too many lines right across. Okay, so imagine if you have one line, one Fibonacci down here, another one down from this point, and then you have, say another line down from this point. It's just going to be too many lines. You end up confusing yourself. Okay, so what I would always suggest is that you want to clean up the chart. Clean up the chart, right? So this is the same one that I was just showing you from above, from before. We had a big downward, and then you see price bounce up, or price has bounced up. So you draw another one up, and then, price bounce back down again. Then you draw another one down. You've got lines everywhere. And it becomes messy. It's almost untradeable. It's not the case where the more lines you have, the more profitable you're going to get, right? In fact, it's the flip side, because the more lines you have, you can't see, or you get analysis paralysis, and then you have too many things to consider. You don't jump into a trade. So clean up the chart. What I mean by cleaning up the chart is that you start looking for what's relevant, right? What's relevant, you look for that confluence, right? We're looking at this, we see price bouncing, we found that 38.2 as that confluence level. Although it's broken, although we say that it's broken and it'll be invalidated, but we have seen that reaction right across. 50%, we see a reaction there as well. 50% for that downward move, we see a reaction there as well. Okay, so you all know how to. Is it okay to use this setup for a 5-minute chart? It is. You can use this on a 5-minute chart. You can, if you are comfortable trading on a 5-minute chart, you can. I would say that I was saying, preferably H1 time frame, but if you're comfortable on the smaller time frame, then yeah, you can use it on all different time frames. Okay, what was I going to say? Okay, I've done this enough in times in front of you guys to show you how do you actually clean up the chart, right? So you go on TradingView, especially, is that you're going to, let me just take one of this away. It's just too many. Oh, okay. Oh, what am I doing? All right, we do one there. Okay, so you go into there, you can double click on it, and then you can just remove, right? You can move this to the side and just go, okay, what's relevant? Right, I have this big downward move. What's relevant? 38.2 is the most relevant now. So I would say, okay, that's my point, right? And why I like 38.2 is also because it's found this level. It's close to that 103.50 level. A not round number, but a relatively round number level. 38.2 is come close, is rejected. So this is how I would look at it and go, okay, this is my fib level as a resistance. Okay, this is on H4. Then you could go into the H1 time frame, and then you'll be looking, okay, I got my resistance there. Draw this up, right? I would apply everything again just to see what's relevant, right? What's relevant here, and you would see that for this one, maybe even that 61.8 could be, let me just make this a bit smaller. 61.8 broken, right? It broke that 61.8 level, but then as it broke, it bounced back up, and then now it looks like it's trading back down again. So this is what I mean by cleaning up your charts, right? As you clean up, Hi all. 38.2 works well for higher time frame H1 and H4, but do note if smaller time frame 50 and 61.8 is more relevant, as lower time frame has more noise. Very good point. So just to read that again for everyone is that 38.2, one of our viewers, sorry, I'm not going to mess up your nickname again, I'm sorry about that. One of our viewers on TradingView was just sharing that 38.2 works well for higher time frame in H1 and H4, but do note that if on a smaller time frame, possibly on the 15, 5, and 1, 50% and 61.8 is more relevant as the lower time frame has more noise. Completely agree with you on that. I'm not stuck on which percentage is better or worse, but yeah, go for the key levels on a smaller time frame because it is noisy, right? If we went on to the M15 now, you see that, just to elaborate a point is that if we did this move down, right, you see that it's gone up, it's tested 38.2, is turning back down. This is on M15, but it broke through 23.6 quite easily, so it's going to get noisy. Just be what I have on my last slide is actually, don't use fib levels alone. I'll give you a preview of what I'm going to tell you about. Is you can't use it alone. You can't just think of it as a shortcut and then start drawing the lines left, right, and left to right everywhere, and think that it's going to identify the levels for you without any other hassle. So it's really there as a support, as additional information, but you cannot use it alone. All right. So we'll have that. Looking forward to the last slide. Don't look forward to it too much. I look forward to going through the slides, not the last slide. All right. So we have that, and like I was just sharing with you over here, we have that confluence levels. So giving you a more easier view here is that you draw that confluence level right across 38.2, 50%, 50%. That's the area. Okay, so you see that this is the most recent, right? So assuming that we didn't see any of this from before, this is the most recent. You say 50%. You see that price breaks above your 50% retracement level, right? As it breaks above that 50%, you go, okay, I have this level, 91.55. It's broken above. It was this confluence level. This is where I would say that, we might see that more sustained move, which is very similar to what we saw earlier on, right? It broke above. That time was 38.2 and 50%. As it broke above that, we saw it trade up, came back down. Now it breaks above again. We would first, or at least, expect it to trade up to that similar level as before, all right, with the next resistance up there. Okay. Oh, wait a minute. Okay, yes. So I am going to look into more slides. We'll do the drawing. You know what I normally do during my sessions where I'm coaching groups of people or traders together. We used to run this on Zoom, and then I would actually get people to pass over the host function to each individual and then get them to draw on a chart. Unfortunately, I'm not set up for that right now, but that's the way to try and test, right? Test in the easiest term, and see everyone that they can draw it based on what I've just discussed. Okay, so maybe what you want to do is you could draw it out, right? Do some fib levels analysis, draw it out, If you're on TradingView, draw it on a TradingView chart. You can post it. You can tag me on it. I think you can tag me on it, and then I'll be happy to, look into that for you guys, just to try and give you my view, whether you've done it at the right point or things to consider, all that kind of stuff. All right. So fib levels don't work alone. You must include your support resistance levels. Okay. What I like to do, or what I tend to do, you guys have seen me do this, is that I would identify a resistance level, a support level, and then I'll have the in between. I'll use the Fibonacci in between to say, okay, I have my key resistance, I have my key support, and then maybe at that 50% or that 61.8%, we're going to see a possible hesitation, right? So sometimes I call it a hesitation level, or I have a trade running. I think one of the guys at the earlier session was like, why do I close out my trade earlier? It's because I look at the hesitation level or that fib level, and I say, price is going to get to, if price gets to that point, that's probably where I'm going to think about closing if it doesn't break. If it breaks easily, great, I'll keep holding on to a trade. If it hesitates and it looks like it's going to bounce from that point, I'll close out my trade. Okay, so I have my support resistance levels, then I use my fib levels for the in-between points to identify possible hesitation. Hi Rizan, how are you doing? Fib retracement levels are not foolproof, right? Like I was telling you, it's not a shortcut. It's not a shortcut. You should identify your own levels first. I always encourage to use fib levels as a double check, as a check. Like Akan B was asking, how do you know where price will respect? You have your levels, you use the fib levels to double check, just so that you can see how it moves. Markets are unpredictable. Markets are very unpredictable. Price movements can be influenced by a range of factors like news. Sudden surge in price could be a technical surge. News could cause that spike and that surge. So, my approach is fundamentals first. I look at the news, what could happen, where could prices go. I look into the technicals, I look for my trend, my support resistance. Then I start applying indicators and fib levels in. Okay, so you can see my priority in terms of analysis is fundamentals, trend, support resistance. Then I start looking at indicators to provide the additional information or that reinforcement of information. Right at the start, we talked about this, where what happens if you identify a different high point, a different swing high point to the person beside you, right? Fib levels or retracement levels are, or how you draw it is very subjective, right? Or can be very subjective. But we highlighted that even if you missed off or missed a point, you got a higher one, someone has a higher one, you got a slightly lower one, you'll end up at the same low point. Your levels do tend to correlate or meet quite closely. So don't stress out too much about identifying that one key point, right? Because I've seen a lot of people, not just fib levels, but support resistance. They're looking for that one price. You focus too much on that one price, it's not going to make your trading any easier, right? So you look at it as an area, near enough is close enough. Okay, fundamentals from Forex Factory. Yes, I do use fundamentals from Forex Factory. And then we have other strategies that uses the Fibonacci, like the Elliott wave and the harmonic patterns. I'll tell you that I have no idea about the Elliott wave, or I tried, I've spoken to some people who are very good at harmonic patterns, but it's just not something that I have really taken on board consistently as well. Okay, so this is a quick overview of the fib levels. What I do want to get into is giving you some examples again, right? So for example, I do have one more. No, that's invalid now. I did have a couple of other slides but with the way price has moved, it's a bit invalid. This is on M15, so I'll take that away for now. This is on H1. Okay, so this on New Zealand dollar on the H1 time frame. If we did just that bottom up, you see that price tested that level, came back down. Now what we're looking for, this is where you clean up the chart and say, okay, I'm looking for that 50% level, 50 and 61, right? You can see that it's tested there. So it comes down. If price does come down to test 50, then we'll say, okay, if it breaks, we're going to see it trade lower, especially that 61.8 point. If it bounces off this 50% level, we could see a continuation back up again. Okay? And if I did this, I think we'll be able to find something interesting. Right? And there we have it. See that 38.2 forming right across as well. And also see how price went all the way up. So sometimes you don't notice it until you draw that out and you go, why did price come up to this 0.6271 level and then start turning back down, right? It could, I'm not saying that it is 100% on this, but it could also be because of that 78.6 level, right? It hit 78.6 at 6270, hit the level, failed to break higher, and started trading back down. So what we're looking for here is that price goes down, right? Comes back up, tests that 78.6 level, retraces back down to about that 50% level, and then from here we could see it push back up again, right? You can see it now bouncing off a little bit. Don't rush into the trade. We're looking for this to push back up. Now let's say that you are super, like Suki is, such a smart indicator, never knew about this. Let's say if you went overboard and then did one more line here. I wouldn't normally on such a small move, right? But you can see here at that 50%, say that 50% level, right? So we're looking at this going, okay, if it bounces off 50 here and breaks above 0.6250, right, as a 50% level, then we could see this continue to the upside. Do I use, I don't use the fib as a predictor, that 1.27 or minus 0.27. I don't use it as a predictor. No real reason why not. It's more just something I haven't applied too consistently, and I tend to try and keep it a little bit simpler in that sense. Okay. So short and sharp, like I promised. I didn't think I was going to get to the 1 hour mark. Just wanted to share with you a quick snapshot view of the fib levels. What I do want to try and do is to integrate more educational sessions in addition to our daily analysis, right? So if you found this useful, interesting, potentially beneficial, please help me out. Click that like and subscribe button on YouTube and on TradingView, that little rocket ship button. And if you haven't already, do follow me on TradingView. With that, also leave it in the comments if you have any suggestions on topics that I should get into. Do let me know. I'll be happy to take them on board. So for now, trade well, trade safe, and I'll see you tomorrow at 3 p.m. for our daily analysis as usual. Take care now. Bye-bye.